The investment community around the world is spending a whole lot of time figuring out where and how exactly to play in cryptocurrencies and blockchain. And there's a tremendous amount of confusion out there. It's very early days. Dan, you've been in the venture business for a long time, and you were really early, generally back in 2013 when you started this latest focus on blockchain. It was essentially zero level of investment at the time. You were on the ground floor. How have you seen it evolve?
Yeah, it's really changed a lot, which is great. We thought it would be very transformative to financial services. But at the time, there were really no custodians, there were no ETFs, there was no way to get exposure. We actually created Pantera Bitcoin Fund to allow LPs to get exposure to Bitcoin. Now we have institutional grade custodians and other service providers that are going to allow the industry to develop.
You know, there's a tremendous amount of volatility in the prices of cryptocurrency. And so from an investor's perspective, how do you address that? What do you think people should be doing with their portfolios?
So I think the first thing is we grew up learning that volatility is bad. But if you think about Bitcoin or blockchains as a call option on the future payment rail of the world, volatility is great when you're long a call. And that's the way you should think about it. Put just a very small amount of your money into cryptocurrency, an amount you could be willing to lose, and let it ride for many years.
And to any cryptocurrency, but you think?
I think you should have a basket. There are, you know, I've seen too many investors spend a lot of time thinking about, is it going to be Bitcoin? Is it going to be Ethereum? Is it going to be Ripple? That's not the way you trade a stock portfolio, right? You don't say, I'm going to put all of my eggs in the Google basket and I'm never going to buy Apple, I'm never going to buy Amazon. You buy 30 things and some work really well, some don't. That's the way you should be with cryptocurrency.
You've got an expression used to try to describe what's happening with cryptocurrency and blockchain as money over IP. What do you mean by that?
In the end, it's just like what VoIP did to the telephone business. Back in the day, you had a monopolist. In the US, we had AT&T, a copper wire to the UK, and British Telecom. The only way in America could call someone in the UK was via that very expensive phone line.
Right.
When we figured out you could route voice over the internet, it dropped the price more than 99%. That's what's happening in finance. There's a few monopolists or oligopolists that control all the payment rails. Right. Very expensive to send money across borders, very expensive to do a credit card swipe. All those fees are going to come way down when you can route money over the internet.
One of the things that the community always talks about is the scalability challenge of blockchain. Where are we on that challenge? How are we going to overcome that? You know,
6 or 8 years ago, blockchain was basically a science experiment. We didn't know if it would work. It's now proven to work. It just needs to scale. The basic blockchains like Bitcoin and Ethereum do about 7 or 8 transactions per second. Over Christmas, Visa does 15,000. So you got to go up many orders of magnitude. And each of those projects has 2 or 3 different possible solutions that will increase scalability, often orders of magnitude. It's going to take a couple years and it's going to be a little bit clunky, but I don't really have any doubt that in 2 or 3 years you're going to be able to do thousands of transactions per second.